That's a change in paradigm about the value equation of these metals that's really important.
We've got a big resource body, we've got mine lives in excess of 30 years. It creates a basis for sustainable dividends.
We'd like to see a lot of activity coming back in the PGMs, and it's these developments, these new developments, and that could actually give that incentive.
It is kind of the holy grail of the hydrogen economy. If you can crack the distribution network, then the whole game changes.
Welcome viewers to this virtual discussion focusing on PGMs. This forms part of our suite of content for one-to-one mining investment Africa online. Joining me today, I have a highly experienced panel of stakeholders from the investment, lending and issuing side. We're going to be addressing some of the key considerations for investors who are looking at PGMs, hydrogen fuel cells, and to get an understanding of Africa's pivotal role in realizing these cleaner modes of transportation. I have with me Hanre Rossouw, CFO of Royal Bafokeng Platinum, Michael Jones, CEO of Platinum Group Metals, and Henk de Hoek, who is resource sector lead in corporate and investment banking at Rand Merchant Bank. Gentlemen, very warm welcome and thanks for joining me and taking time today. I want to start with sort of setting the scene on the supply and demand outlook. Mine commodities on the whole seem to be experiencing what analysts have called the start of a structural bull market. There's some very high prices across the commodity, the metals commodities out there. We seem to be in a very profitable PGM pricing cycle. So I'd just like to start by asking your views on the PGM supply and demand outlook. Perhaps, Michael, we can start with you and we'll work our way around.
Sure, thanks very much. So, we're not a current producer, but we have been a producer in the past, and we're looking to ramp up production mostly in palladium. Our deposit is unusual and it's 63% palladium. So I might leave the comments to on the platinum side to the Royal Bafokeng, since they're a current dominant platinum producer. On the palladium side, we see continuing tightening emission standards around the world. And although you had the influence of COVID and the economic knock-on of that, the loadings per vehicle are going up. And so we see quite a bright future for palladium prices in the medium term and even longer term. We can talk about it a bit later, but we've got some pretty strong numbers all the way out to 2050 in dedicated research we had done that shows with the combination of loadings and the influence of hybrids that we have a pretty robust market for palladium all the way out that far, which I think is a bit of a contrarian view. In terms of rhodium that a lot of people are paying attention to, rhodium prices, hitting up around 20,000. Interesting. Our view is that rhodium is extremely tight, will continue to be extremely tight, and we may see substitution from rhodium back to palladium, which we understand from some of the OEMs can be as much as 5 to 6 to 1 on a ratio of palladium needed to be substituted. Again, speaking to a pretty robust palladium market. So that would be our view, and I'll leave platinum to folks who are more knowledgeable than me.
Yeah, Hanre, let's bring you in there with that. What's the platinum producer's view on the supply and demand outlook at the moment?
No, thanks, Adam. So we've got 65% platinum as opposed to Mike's 65% palladium. I think it's important to note that certainly in a supply side and a demand side, that one has to look at the complete basket as well as the individual components. I think ultimately you've got your ore body and you can't be selective in what you mine, and globally the industry mines a basket, and there's slight shift in trends as people focus on various seams. You could sacrifice Merensky for UG2, but mostly you've got to mine what you've got. And I think ultimately substitution, as Mike said, will moderate prices, and you will get spikes in relative pricing as certain trends, and we've seen NOx legislation really drive the recent rhodium price. But you'll see short to medium term trends push out the price, and ultimately the best remedy for high price is price. So substitution will then bring back demand. So I think in terms of the aggregate basket, I think we see the price as robust, and certainly see continued strong demand side trends continue to support the basket, even though one could argue for a rhodium price and even palladium price moderating at the expense of platinum in the longer term. And I think particularly at the moment, there's strong demand fundamentals coming through. We're likely to see a strong stimulus-led recovery globally, and I think certainly demand side factors through recovering auto sales is going to play an important role going forward. And then we're also going to sort out supply side issues where especially the South African producers have struggled with COVID, electricity problems. We've seen Amplats have issues with their smelters. So that also, those factors also need to play out. But I think certainly the short to medium term, we remain very confident about pricing levels. Longer term, I think we'll certainly debate also later the impact of hydrogen, the decline of the internal combustion engine. I think those are perhaps less clear and open for debate.
Yeah, certainly. And we'll touch on those, I think, a bit more thoroughly about where everyone sees that developing in a few moments. Hank, could I bring you in for your view, though, on the sort of near-term setting across PGMs? How do you see the sector shaping up at the moment?
Yeah, I don't certainly want to repeat what has already been said, which I fully agree with. And I guess I have the benefit of being a banker. We normally give you money and we want it back within 5 years. So we only need to know the period of 5 years, what prices are looking like. And I think it's an exceptional period where despite car sales collapsing in call it old historic terms over the COVID period, prices held up. It is a sign that there is extreme tightness, and with rhodium being pushed to $30,000, it tells you that there is a desperation to get access to the metal because the legislator basically will stop you selling cars if you don't put it in your car. I think these prices, though, will always have and it's in line with what Hanre says. The answer to high price to getting your price down is high prices, and the response that will happen to that. I just think at the moment, most car manufacturers have such big strategic issues to deal with, not only being able to continue to sell your car, being able to hit your CO2 limits. What do we do with electrical vehicles? We need to spend a lot of capital there. And I think where in the past you would have an enormous focus on cutting quality or metals in those particular catalysts, I'm not so sure that is it there to the same extent. They might well say for the next few years, we just have to meet this legislation. We need to keep the sales going. And it could be a big benefit in the short term from a financial perspective. Long term, and again, past 5 years, it's a bit of a different debate. But all the signs we're getting and all the feedback we're getting, this is real demand. This is not a speculative boom. This metal is needed.
Excellent, very good. Well, okay, switching to some of those mid to longer term challenges then. The picture looks perhaps less clear or perhaps more challenging, but how is the panel interpreting this transition to cleaner vehicles on the whole? And where do PGMs kind of sit within the move towards electric vehicles? Some of the legislation that's coming out around ICEs, it seems quite sensationalist at times or quite extreme. How does the panel see the longer term view? Mike, can we start with you again?
Yeah, so I think the number of countries that have zero ICE legislation on the books for 2030 to 2040 is completely nuts. Let's be clear. There's just no way that can happen. It's completely 100% unattainable. And some great work by Matt Watson at Precious Metals Research in California that we have sponsored, looking at exactly what that legislation means in terms of number of terawatts of battery you actually need. So taking the number of vehicles, that's a well-known number, and then simply applying that to the 75 kilowatt hours that you need in a car and multiply that out. So you get some pretty extreme numbers. Basically, his calculations show that if by 2050 you want to achieve those objectives, first of all, you need batteries to go from 250 watt hours per kilogram now, which is the best battery there is, up to 1,000 watt hours per kilogram. And that's to get the kilograms down. in the batteries. You need that power density in the battery. And then you need to 4 times mining of everything that goes into that battery. So those kind of numbers are just completely unrealistic. I mean, supply side wise, getting that amount of material and getting the battery threshold up to 1,000 watt hours per kilogram, it's just not going to happen. So when we look at it, we see something like 33% as a kind of extreme, but maybe achievable balance in the powertrain grouping. So if you had 33% of cars that were on batteries by 2050, and those batteries were at 590 watt hours per kilogram, it sort of could work. But you're still talking about 4.75 terawatts of battery capacity, which we don't have. So you have to develop that in the extreme. So I think the solution to all of that is in the hybrid area. And interestingly, some of the legislation is actually banning hybrids, which is crazy because it's the only practical solution. So in our model, we have about 41% of the autos by 2050 are hybrids. And those hybrids, of course, increase loadings of PGMs and are still ICE engines. So again, in our model out to 2050, we show car numbers actually in ICE rolling over and coming down a little bit in numeric numbers as the overall number of vehicles climbs, but the loadings in those vehicles outstrip that. So with an increase of loadings of 20 to 30% by 2050, you actually end up with more PGM demand, not less. So even in a world with 33% autos on batteries, you still need more PGMs in a tailpipe than you do today. So that's a really quick summary of something we've looked at in great detail. And the reason we look at it is because we're both involved in battery technology, as you probably know, and producing PGMs. So this interplay between these two things we find really fascinating, and that's the outcome of our research.
Yeah, it's an interesting interplay that, perhaps in some, on a superficial level, the two are separated, but actually they're much closer entwined than people might think. And we'll come on to some of those technologies that you're looking at a bit later as well. Hanre, could I turn to you and get your perspective on some of these longer term trends and challenges that you see, and then also your take maybe on the EV revolution? Is it really going to come as thick and fast as some of the headlines and some of the policy is suggesting, or do you see this sort of hybrid ICE really still having a strong role in the sort of near term by like 2030, for instance?
I think to the extent that one can't write off the fact that we are in the declining age of internal combustion engines. So we are ultimately moving towards EV, and the focus is certainly shifting to that. I think the question really, in my mind, is the timing of that. And we've also done a lot of work on finding that balance. And I think Mike certainly hits the nail on the head in terms of just unpacking some of these myths about EV. And I think a lot of statistics focus on or make pronouncement about EV, but certainly hybrids, and understanding when people talk electric vehicles, is that pure, is it battery electric vehicles, is it hybrids? And we certainly also believe and see the trends already playing out that hybrids will be the technology that bridges this gap. And certainly kind of trends seem to imply that this bridge will be there for a while. And to the extent that Mike outlined the loadings, is that in hybrid vehicles, you still see significant loadings, actually potentially higher than your pure internal combustion engines. So if you look at the consensus views, probably more for about a 25% penetration of electric vehicles by 2030. I think that could be, as Mike's outlined, over ambitious. And we see a lot of pronouncements by the likes of Volvo saying that they won't make any internal combustion engines very, very soon. And that's how it's reported, but what they actually say is it's pure internal combustion engines. And the hybrid that they are talking about, and it certainly then is a mild hybrid, which only has a 48-volt battery. So it's still heavily dependent on an internal combustion engine. It will be more efficient, but it will run at lower temperatures. So the loadings will be increasing. And that gives us confidence, certainly in the medium term, to make investment decisions and to continuously to support the market.
Yep. Hank, what's your take on some of those comments, and also, do you have a view on perhaps what the industry should be doing now? Are you happy with some of the approaches, and how do you interpret?
Yeah, no, look, I fully support the viewpoints of the two panel members. There's a couple of other things. We are linked to Morgan Stanley, and they do some quite detailed EV research, and they're probably a bit more on the bullish side. And I think it's difficult to have a counter argument as an industry if we look at, call it the front page news that electric vehicles gets everywhere. It is just the back page, which is the reality. That's where the mismatch is, and unfortunately, that doesn't hit the headlines. I think there is a lot of capital being thrown at this. Volkswagen and the combined German car industries, it is dozens and dozens of billions of dollars that are going into these developments. So there's something coming. Then Apple announces we want to make an electric vehicle car as well. There are a couple of counter effects, and a lot of it, I think, will also hinge. I don't think it's the consumer experience necessarily, but it's pricing as well, pure electric vehicles. And it's simply because the raw material cost in an electric vehicle is a far higher percentage than in the development cost or the cost of making a combustion engine car. And if indeed even half the predictions get ready, we will have a struggle to get the right amount of quality lithium in, nickel, cobalt. And even if we come up with an alternative battery concept, the copper content alone, and it's not only needed for electric vehicles, it's also for the whole infrastructure around it. Are we building enough copper mines right now? And what happens if copper goes to 12 or 14,000? There's only so much that subsidies can do to stimulate actually EV demand, because eventually those volumes get too big and the government can't afford to continue subsidizing. So my sense is there's going to be a bit of a market impact, that there could be a period where these become reasonably elite type of vehicles for a while. Even if you wanted to, you have to price them up to survive as a car manufacturing company, because you have to pass through this 40-50% per car raw materials cost. And if it's super volatile as well, how do you plan big volumes in a plant where prices flip for nickel up to $50,000 and back to $20,000? So there are some real issues, I think, of getting steady mass production going. And that is also Elon Musk's argument, is that they're ahead of the curve, but getting EV production in mass production, that's a proper skill, and not everybody will get that right. So I think there are some natural breaks on this. Nevertheless, I think as an industry, we have to keep on telling the story that part of this EV revolution will indeed be the hybrids. As an example, in the UK, because of very high PGM prices, they are stealing 12,000 catalysts a year. The cars they're targeting is these little hybrids. They've got high loadings. They put the car on the side, chop it off, and the next morning you find your car on your side with catalyst missing. And hybrids are still going to be a long intermediate measure to actually green up and get your CO2 emissions down. You will sell your battery electric vehicles, and to a lesser extent, probably your full combustion engine versions. But this drive into hybrids, I think, should be underestimated, and is often not properly split out in battery electric vehicle stats.
Yeah, so it seems to be much more of a tiered market for the types of vehicles, as opposed to this sudden flip of EVs reaching critical mass. That's an interesting way of looking at it, and it makes sense from some of the supply tightness we're hearing around the other materials, like you mentioned. It's not they go into EVs like copper, for instance. Is enough copper coming online for all vehicles? Okay, that's great. So just wanted to touch then on the panel's view on the hydrogen economy, and where that sort of stands in terms of its development. Firstly, because I'd heard about it as a sort of alternative to the EVs within this green transport revolution, but then also as producers of these key PGMs that will go into that, making that hydrogen economy. How developed do you feel that it is right now globally? And are hydrogen fuel cells the game changer that they're poised to be at the moment? Does anyone want to take us on that?
So somebody else go first. I always get to go first. So Hanre, why don't you go first? I'll give you the first shot.
What's Bafokeng's view on hydrogen fuel cells?
Sure, and I think it's about time this panel starts disagreeing about something as well. So maybe
I'll give it my best shot.
You're sometimes good at that, Mark. So, but I think it's worth noting that, and certainly it's more a personal view, but I don't think hydrogen is it's not going to be the saving grace for platinum. I think there's a lot being said about hydrogen revolution, and on a daily basis you see Shell or Total or oil companies shifting into hydrogen, putting up hydrogen divisions, a lot of R&D going into it. And I think one needs to go back to the science. Hydrogen is a way of storing energy, and ultimately it's a battery replacement. So in a sense, the electrification of the drivetrain will feed into the potential to use hydrogen as a power source, and obviously the fuel cell and platinum within the fuel cell is the way of transforming that chemical industry energy back into electrical energy. I think the reality is that hydrogen is not just green yet. So very limited amount of our hydrogen, global hydrogen, is produced green. Kind of mostly it's grey hydrogen from carbohydrates. So still, I think there's a lot of work that needs to be done there, really, to green up hydrogen as well. And I think hydrogen is not only 10 years, but probably more behind kind of battery electric vehicles. So there's a lot of work that still needs to be done in terms of maturing the technology. I think certainly exciting longer term, but I think in terms of making a dent on global supply and demand for platinum, I just don't see that happening kind of very soon.
Would I be right in saying then that it's not forming part of the business model, or perhaps is that something more longer term? Once this market develops, you'll look at reacting towards that.
I think certainly in terms of forming part of the business model, definitely not. I think it's certainly there's a time and place kind of and a budget to put some money behind it. But I think to centrally bet your business on hydrogen, if it comes to being a platinum company, certainly doesn't make sense. Not for me.
Yep, very good. Okay, Michael, could we have your view?
I'm dying to disagree. It's just in my nature. I'm sorry. And Hanre knew I was going to do it. So I think there were some points that are very valid there. I mean, 84% of hydrogen production is from cracking methane. So, it's not green yet. Electrolysis of water, of course, from other power sources use platinum electrodes. So that's useful. I think the place where platinum does have a role, and I know Anglo, our partner in batteries, has done a lot of work on this, is in medium heavy-duty truck fleets. So where you have a centralized fueling depot, and you have a fleet that does a repeat set of trips often, I think there is good potential. So even trains, for example. And I know that in China, a lot of work's been done on bus fleets and heavy-duty trucks. And actually, that demand is not insignificant because, of course, you're talking about very big engines. And at a car-size engine, you're talking about something like 3/4 of an ounce to an ounce loadings. So that medium heavy duty truck market can have a material impact in the platinum market. And I think over the 10 to 15 year period, it will actually have an impact based on that particular market sector developing. The challenge, of course, in the car application is distribution of hydrogen. And if there's a key technical problem that needs to be cracked in order to get hydrogen fuel cell cars widely used, it's the distribution of the hydrogen. So things like liquid organic carriers to move hydrogen around are very interesting. And we're actually doing some technology investigation to actually look at that particular area, because it is kind of the holy grail of the hydrogen economy. If you can crack the distribution network, then the whole game changes. So we find that technologically quite interesting. But I agree, in general terms, yeah, it's a ways out. But I think the medium heavy duty truck bus market will surprise on the upside for demand in platinum.
Certainly. Hank, what's your take on that? Do you share excitement for the hydrogen fuel cell technology, or is it too far off?
I guess a couple of points. First of all, it is very good that people are talking hydrogen now. Where if you talk 3 years ago, that's freaky technology, it's never going to get through, there's too many issues, and they had 6 issues to mention why it wouldn't work. If you would measure the amount of times hydrogen gets mentioned now in the press, it's probably a factor 40 higher than what it was 2 years ago. So there's a lot more attention, a lot more focus, and as a result, a lot more money going into it. But all hydrogen doesn't mean this is good for platinum. There's particularly use for hydrogen in, for example, industries that at the moment would battle to become carbon-free. In, for example, steel smelting, you need to find an alternative that has called hydrogen as a source, but it has absolutely no platinum impact. What I do agree, and sorry, Michael, that I sometimes a bit too often, by the looks of it, agree. But what I do agree is that the delivery market, I'm still a bit in two minds. What vehicles in the personal vehicle markets would be eventually fuel cells? It seems to have been a case of Betamax versus VHS, where Betamax at the time was a much better technology, but VHS got the volumes and eventually won the race. And it could well in the personal vehicle side that the plants have been built. I remember how solar cells actually boomed globally. It was China putting so much capacity in that they basically dumped solar cells on the world. It became cheaper and the volume started coming, and it became a self-fulfilling prophecy. And my sense in battery factory commitments that have been made and the volumes that are being made, that it's very difficult to compete on much smaller startup volumes in personal vehicles. But there is probably no alternative but fuel cells, hydrogen fired in heavy duty trucks, and they make a lot of sense there. There's space to fit the fuel tanks in, a distribution network, especially if it goes point to point, fairly easy to actually implement. And do you get fast enough volumes? I do think that once they see battery electric vehicle momentum in the personal car, there's going to be an attack on the heavy duty car, because that's essentially what's happening. We're trying to clean up bit by bit. What goes easiest goes first, and then come the more difficult ones. And that's why I think from a timing, I would agree that the volume kickers will probably be 10 to 15 years from now. There's a lot of money going in. For the next 5 years, all the focus will be on battery electric vehicles, but the development and the commercialization of hydrogen fuel cells for very specific sectors of the solutions to CO2 emissions and global warming actually will go in the background. And I think as an important part for the industry is funding particular research that will assist that movement. And for example, AP Ventures is doing it. Anglo American is spending it on big heavy duty trucks in their pits and see how they can actually move and almost promote their own subsidiary. And if we can get that cracked in these 300-ton monsters and having a proper fuel cell with hydrogen in it, centralized, it could be a model that could work around the world for mining, because that's another effect we're seeing now is a lot of research, or call it disclosures, will need to happen. How clean is your mining? How much CO2 do you emit for these metals that we're going to put in my battery electric vehicles? And as a miner, will be an incentive soon to actually start saying, we better get these hydrogen trucks if the technology works. And we pay rather a bit of a premium, because our metal will not enter into certain parts of the economy if we don't show that we have done our best to actually minimize CO2 emissions. So there's some additional effects that I think will accelerate it as well, that could be very helpful for the industry.
Yeah. Hank, do you see investors sort of steering away from PGMs maybe on those ESG concerns, or do you think it's perhaps going to open up potential for more capital to come in through once the industry tells the right story around how these metals are going to green economies?
You've probably hit the nail on the head with the last bit. Has the industry told the right story? They've started to be on the back foot first. And there's been obviously bad publicity around what happened in the Congo, the dam failures. We have a lot of ground to catch up. And if you look at, for example, the recent Glencore presentation to shareholders, probably half nowadays is taken up on ESG concerns and what are they doing around global warming. And you're on the back foot as an industry. But the story that isn't properly told yet is that, guys, you can sit there with your Frappuccino at Starbucks and complaining about the world, but that battery electric vehicle that you came from mined material. And you cannot protest against everything when that mined material isn't going to be there to build your next battery electric vehicle. And that is where the education around mining, because unfortunately they're often put in far-flung parts of the world, and the consumer or the driver and the millennials driving, call it the greening of the world, need a bit of a reality check or how we get the materials to make this all happen. And that is, I think, what we still have to work hard on as a mining industry. This is absolutely necessary to make it all happen.
So there's one subtle change to what you said there, Hank, which we've explored around quite a bit because we're involved in PGMs putting into a battery and the technology of batteries and so on. So we spent a lot of time actually thinking about exactly the last issue you mentioned. And interestingly, if you tell young people that if they want that thing, they have to have the mining underneath, they don't like it. It's a very subtle difference to actually say it the other way around. Isn't it great that you have this thing? And this is where the stuff comes from that makes it. It's a very subtle difference, but it's the idea of the positive supply chain looking from the top down, because remember that their perspective is from the top down, not the bottom up. So if you try to tell them the bottom up story, they don't like it. They don't want to know about it. I just want my thing. I want my iPhone, right? And I want it to be charged once a week. That's what I want. So you have to start from the perspective of, isn't it cool that we have the stuff that you can have this thing looking from the top down? It's a very subtle difference in the message, but we've found it super effective. So we actually literally have millions of views on short little videos that tell that story that way. And we've experimented with this. So we actually statistically know what the difference is in the way of telling the story. It's really interesting and it's super subtle. But you're right, the message has to be there, but it has to be crafted really carefully. And it's starting from the perspective of the device or the thing or the objective you want first and gently looking downwards. So anyway, that's my point. It's been really fascinating. I've been studying this for like about 6 months. So it's really interesting.
Yeah, it reminds me of the iPhone advert where all the components were sort of segregated out and laid on top of each other individually, but aligned perfectly, so you could see all of the parts of the device. And perhaps more, well, definitely a lot more messaging like that, where you can understand what's under the hood. It's really important. Okay, I wanted to come to a point, Hank, you raised around R&D and spending, and then Mike, you've got something that you're doing with Anglo, and it just pricked my mind to talk about what's the activity there and what's the innovation that you're looking at there within battery cells.
Sure. So I literally entered in Google 3 words, palladium lithium battery, one night sitting at home. And my thesis was that, a battery is a chemical reaction in a box. So why wouldn't a catalyst be positive for a chemical reaction in a box? Makes sense. So sure enough, there was an ex-postdoctoral fellow from MIT who worked in batteries his whole life that actually agreed with that. And he was busy putting PGMs in a lithium battery. And the magic of the internet, 2 weeks later, I was standing in his lab, and 2 years later, we had a business built around it. So that technology is basically taking PGMs and putting them, first of all, we put them at the cathode. So what most people say when you talk about putting PGMs in a battery is they immediately say, usually in the first 4 sentences, they say PGMs in a battery, too expensive. Quite interesting. So the question you have to ask yourself, if you replace the cathode with carbon nanotubes and palladium, with dots of palladium inside carbon nanotubes, what did you thrift out? And how much is that worth? And interestingly, if you use an NMC technology, which a lot of the car batteries are, you thrift out about $7,000 in a car worth of metal is gone. So all of a sudden, I got $7,000 to spend on PGMs at my cathode. And how much do I need? I only need 12 grams. So all of a sudden, PGMs aren't so expensive. And in the case of lithium sulfur, you can take the battery to 3 to 5 times the power to weight ratio. So it's pretty well acknowledged as the next chemistry as a stair step in battery technology to get away from lithium ion. And that gives you a 3 to 5 times jump in power to weight ratio by thrifting that metal out and changing the electrode and the anode actually. So that stair step is huge and it's well worth the metal. So we have batteries now that I believe are the best lithium sulfur batteries in the world. They're cycling over 500 times. They're doing their thing and they involve palladium and carbon nanotubes. By accident in the lab, we actually found something else that can be used as a separator, actually formed in our batteries. It's not supposed to, but it did. So we think we have another piece of technology, which is patent provisional right now, which has an application to all batteries, not just lithium sulfur, but all battery chemistry, including lithium ion. That one's super exciting. And it was mentioned earlier about the manufacturing momentum that's required around batteries. So the reason we're excited about this, the technology around all lithium batteries is that the manufacturing train has already left the station. So if we have an innovation that goes into an existing battery line, it can be applied right now. You don't have to spool up a whole new chemistry. So both of those things are inside of a company called Lion Battery Technologies. And we own, as Platinum Group Metals, we own 52% of it, and Anglo owns 48% of it. But this is super exciting stuff that can change the battery market and the power to weight ratio, but it can also change the PGM market. And if you think about it, it's a natural teeter-totter, because if ICEs go down and we thrift out, and we take out 5 grams of palladium out of ICE engines, if I need 12 grams in a Lion battery, we're in a happy place. So that's the things that we're working on. It's probably still 3 to 5 years from a full commercial application. But the lab work is, we've hit every technical milestone since we started this process. So that I'm absolutely certain of the fundamental principle that PGMs can play a role in a lithium battery. And that's patented to our company.
Wow, that's exciting stuff. And yeah, potential game changing there. Great. I wanted to come on to some more strategic questions around your businesses now for the time that we have remaining. I wanted to ask, perhaps this is something you sort of touched on there, Mike, as well. In view of the sort of bullish price environment that we've got right now, what are shareholders asking you, the companies, to do with your cash? Are they asking you to invest in growth? Are they asking you to look at strict capital discipline? What are some of the things that you're responding to, given where we are in this metals price cycle? Hanre, let's switch back to you.
Thanks, Adam. I was actually talking about this to a colleague earlier today, and I said it feels a bit like attending a dinner party, and it's the excitement is slowly growing. So certainly you call it a boom market, a big boom. It's I don't think we're right there yet. It's still a group of responsible adults just enjoying a quiet drink. There are some crazy people at the punch bowl already making bold pronouncements, but it's still reasonably sober. And I think the excitement amongst analysts, shareholders are fueling what could be potentially a big drunken party. But I think at least we've got a bunch of adults in the room. So I think we've got designated drivers. I'm a designated driver for our company, and I think it's the decisions and the structures you put in place in terms of capital allocation that's going to make for a sustained good time. I think we've seen the previous booms, people doing stupid things way too early in the evening, and the lights go on, the music gets switched off, and we all sit with big hangovers. And I think that to me makes this a little bit different as well. I think we've got across the sector, whether it's shareholders, market participants, companies, I think people are realistic about kind of where this could go and the natural kind of balances that flows into a market that runs ahead of itself. So I think in that sense, capital allocation still is done responsibly. And I think certainly to your question about what are shareholders calling for, our shareholders are calling for dividends, buybacks. They're looking for return of capital that's not happened to date. If you look at the last 10 years, People have built projects, us included, and our shareholders are saying, listen, show us a return on those projects before we give you money or allow you to invest in the next project. So I think we're still reasonably sober at this point.
Yep. So the previous big boom is still very much in people's minds, not to get carried away or misjudge demand growth, things like that.
Absolutely.
Hank, do you have any points of view from the investors side, the investors that you work with and speak to, shareholders, where you think their sentiment is at the moment for what the company should be doing?
Thanks, Adam. I actually work for a bank, so obviously the first thing they need to do is pay the banks back. But the feedback we hear is very much dividend focused, and it's important to see that historical context. We had obviously a previous boom period where everything went wrong, and there's lots of rusty mining gears out there that eventually didn't make it. But also we've had 12 years of essentially drama in this industry since 2008, 2009, where there was basically shutdowns, optimizations, retrenchments. And it is not that we have had a long period of super high prices. We've been talking of 18 months or so. And I think it's absolutely right for the shareholder to say, give me dividends first, and then we can talk about other capital allocation. I think linked to that, though, is that it is, from the previous discussion, also quite clear. Can you really commit 10, 15-year capital, because that's what you're doing, before you actually see a return, particularly some of the deeper underground mines, which I don't think necessarily we're going to have a lot of them built anymore. It's going to be the manganized, more shallow ones, and projects like Mike's. But even project like Mike's, they take a long time to actually get into fruition. Hanre has the experience as well. They are not easy mines to get going. And I think the reluctance by some of the mining companies to look at these projects, what prices do you put in for, and what volumes do you put in 10 years from now? Are you going to depend on platinum to carry you through, for example? And I think those are fundamental questions that a lot of even investors struggle with. But like, is it the right time to commit 10 billion rand to go underground? And we need more, I guess, convincing from company management if that clarity is starting to emerge. And it might be the fuel cell story. It might be the fact that we're spending a lot more on, say, developing the jewelry sector, supporting the jewelry sector as a pillar, and investment sector as a pillar. And I think I would see pressure for the next 12 months at least on dividends. And if there's really a good sense in 12 months' time that the prices we're seeing are firstly reasonably sustainable, that there is more momentum on the hydrogen side coming through, and the confidence is building that we can commit longer term capital to and put that in the ground, that's when I think it will be a lot easier at board level to commit to it. And it's very tough to do that right now.
So I'll be the contrarian, and actually I have a unique position that I had the worst hangover of any of the three panelists here, one that almost killed me, actually, literally. And Hanre was actually the beneficiary of my hangover. So we won't go into that. But so I shouldn't be an optimist, having been the one with the worst hangover. However, I do think that there's an interesting structural change happening in the industry, and it plays into the capital discipline, is that, you know, spending sustaining capital at a fairly low margin is not conservative, right? That's an important perspective, that spending significant sustaining capital where the margin is low is not more conservative than maybe spending more capital into a project that's extremely high margin. And so I think some of that capital discipline is disciplined into something that if we keep the rand at 14 and we do see prices move back, you've actually disciplined your capital into a failing business. Whereas if you've been more aggressive with capital and moved into something with a bigger margin, you're in a more sustainable business. So when we look at Waterberg with a $640 an ounce cost and bulk underground mining, it looks like it's because it's greenfields, it's risky capital, but actually, again, sustaining capital with a low margin, it's not. So I think that juxtaposition gets lost in the discussion a lot. And that's why we're confident about the structuring of financing we're doing now be able to actually build this mine, because at the end of the day, if you're at the bottom of the cost curve, you win. And I've lived at the top of the cost curve, so I know the difference. So that's why we have confidence to go ahead and start working to apply capital now.
Yep. That's good. Just thinking about South African investment climate generally then, because you touched on some points there. Is there some uncertainty there that could be, the investors could be wary of looking at South African mining companies? Maybe as a secondary point, what would be some of your key messages to investors as to why holding a South African mining company within your portfolio is an attractive long-term proposition?
Who would you like to go first?
Anyone. Let's go around again.
Sure. Okay. So I would say it is improving definitely from the Zuma years to now. The governance around the country is definitely improving climate. I see this in the international markets all the time. It's in our New York Stock Exchange trading volume. We're definitely seeing a significant increase in liquidity and in interest in South African mining. Deals like the Triple Flag deal that was done with the Royal Bafokeng, for example, is an international streaming company that's investing significantly in South Africa. So I would say we're definitely on an improving trend, and that, you know, caution to government and people setting policy that, you know, we need that improving trend. Capital requirements are big. We need international investors to participate. Multiples are still not great. In other words, if you had a gold company based in Canada or the US and you compared it against its trading multiple, you're probably still at a 50% discount. It's something in that order. So we're not out of the woods yet, but the trend is the right way and it is improving. And I would say to investors, look, we've had 10 years now of the new Mining Act being talked about since 2002 to 2021, 9 years. The rules really haven't changed that much. They've been pretty steady in terms of the rules. The royalty rate has stayed the same. Security of tenure has been pretty good. You haven't read about expropriation of mines. You know, it's really time to look at the political climate and say, really, it's pretty secure for mining. And, you know, I look at my own country where I come from. I mean, Canada is not a saint in this zone, right? I mean, we've seen provincial governments issue mining permits and the federal government stop it. We've seen native issues take mines away completely. We've seen multi-billion-dollar mines turned into parks. You know, it is not zero political risk in the other climates either. So I think on a balance, it's a good solid place that mining is important.
Yep. Hanre, please give us some of your thoughts on that.
I think certainly agree. Sadly, with Mike on that one. I think the trajectory's been positive. I think certainly also kind of and my goodness, if we talk to international investors, you spend a lot of time and energy explaining what is load shedding, and they're like, the electricity goes out, and say, yes, no, we lose electricity supply, and you kind of the Marikana disaster. So unfortunately we've had a lot of own goals as a country, and also as an industry. But I think we've certainly moved forward collectively as an industry. The Minerals Council, Department of Mineral Resources, Energy. I think there's a collective will and push forward, and we've got to just keep the positive trend. I think certainly the key aspect when you invest money is firstly returns. And I think to the point earlier, if we can show returns, kind of return on capital invested, dividends, buybacks, those would certainly bring international investors back. So I'm confident that we are certainly turning the corner. I'm just hoping we can keep the momentum.
Yep. Okay. Hank, do you have some comments to add about the points?
Yeah, I guess one or two things to add. First, it is far easier to lose a reputation than to gain it back. We shouldn't forget that it's taken 15, 20 years of harassment, I would almost call it, of the industry, and issues like load shedding on top of that, then announcements on expropriation, then the big labor strikes. It has really been a hammering of the industry perception by foreign investors. And that's the feedback that we used to get at conferences. I guess we haven't had a physical conference for a while, so people don't complain over a glass of beer anymore. But it is an issue that we need to do. We need to rebuild that confidence. And one of the ways to do that is get some of the, call it the ease of exploration, for example, released and in South Africa. It's been really the pipeline of the industry that has been choked. We need to get some very practical things like having a proper geological database established, which they've been talked about for a long time. We need to know who owns what in this country. So if things expire, let somebody else with more incentives, more money to actually go after these. And it's the basis of the industry that I think needs to be improving. But I fully agree with the other two, is there is definitely a lot of more good news that have come through over the last 2 years than what we had over the last 20. And I think some of the issues around power generation and being able to generate your own power, not fully solved. But I think if that can happen, it helps to green the industry. It will release a lot of capital into that industry, and it will hopefully cap a certain amount of cost on the electricity path for the overall industry. So there's some really good news that is coming through, but we're certainly not there based on the damage that we've had over the last 20 years and got rock bottom at a certain point.
Certainly, excellent. That's a great rundown then. I guess I'd like to round off then just by asking, what's the business strategy moving forward, particularly for the companies, gentlemen, and what would be your sort of summary message for the next steps for you taking your business forward?
Hanre, why don't you go first? I've been hogging first, so why don't you go first?
Thanks, Mike. So I think certainly the Royal Bafokeng Platinum's been listed now for 10 years, and the first part of our journey has been focused on investment and growth. So we've built a mechanized mine that's a world-class mine, and I think that certainly signals a shift for us away from investment to capital return. So certainly, Adam, to that extent, our focus is returning cash to shareholders. Doesn't mean we without growth or investment opportunities. I think the great thing about having two great assets is that you've got the ability to enhance the business through brownfield expansions, optimizations, and those are often kind of very quick payback, very high returns, little capital, and I think that creates a lot of value short term, flexibility in the business, and I think certainly to the extent that we've got a big resource body, we've got mine lives in excess of 30 years, it creates a basis for sustainable dividends. So that's in a nutshell kind of what we focus on at the moment.
Yep. Excellent. Mike.
So obviously we're in the capital development phase of Waterberg. We think we have a world-class project that can be one of the largest low-cost PGM mines in the world, producing 400,000 ounces and expand from there. Our job as management is to put the capital together to put that into production and secure offtake contracts to sell our concentrate. We produce an excellent high-grade concentrate with no penalty elements, dominated by palladium. There's significant interest in that internationally. And we're well along the finance curve where we have international investment of more than half the peak funding of some $600 million. So we have the interest to be able to drive this project forward now as a joint venture, I believe. And and on the technology side, we're a little bit unusual in that we actually have seen a lot of interest in the US in our technology work around batteries. Literally millions of people interested in what we're doing there. And we think that PGMs have a very important role to play in unlocking the whole green economy and green energy. You know, when you think about it, we're looking for energy efficiency. We're looking for new methods of energy movement and transport. And sure enough, when you go to the periodic table, PGMs play a critical role in many of those technologies. And I think because the perception has been that these metals are very expensive, people have shied away from it. And so because we own 45 to 100 years of these metals, we just think about them differently. We own them. So we don't start with the premise that they're too expensive. We ask the question, what can they do? And that's the case of the founding of Lion Battery, but I think there will be other things that we find that are right in the mainstream of the transition around energy that we can be involved in. And so we're looking at those opportunities quite carefully and thinking about the market development based on the fact that we own the metal in the first place. If we develop a technology, one question I always ask people is this cell phone, right? So, would you pay $100 for a cell phone you charge once a week? And the answer is always yes. So I can afford $100 worth of PGMs in this phone because you'll pay for it gladly. And even if the PGMs, even if palladium's at $4,000 an ounce, you'll pay for it because the utility and the use is so valuable to you. So that's a change in paradigm about the value equation of these metals that's really important. And so we're thinking quite carefully about all of that, and can we develop the market at the same time as profit from the metal we have in the ground? So those are the kind of thoughts that we're thinking about in terms of how to structurally position ourselves.
Excellent. Very exciting, progressive. Hank, do you want to sort of cap things off with your take on the sector? Are you happy with it overall as the bank, as the lender?
Look, the good thing is that these developments that Mike is talking about could actually lead to eventually growth back in the sector. And that has been, I guess, a bit of a frustration for the banks as well. There have been very few projects committed to, not only in PGMs, but across the industry in South Africa. It's partly obviously a maturing gold sector. We have a coal sector that's under pressure. A lot of activity in manganese, and we'd like to see a lot of activity coming back in the PGMs. And it's these developments, these new developments, and that could actually give that incentive. And I think separately from that, banks always assess risks as well. Relaxation around what companies can do around their own electricity provision would be very helpful from a de-risking the overall sector. I think labor situation has already de-risked to a certain extent. There's a lot of longer term commitments coming from the companies and labor unions in actually keeping the stability going. And I think regulatory wise as well, it's very important that the South African government doesn't make any strange left or right moves based on pressures on the balance sheet of the country. This industry needs stability. We've had enough changes in the mining charter. If we can keep that and get that invested trust back, it will be really helpful to stimulate this industry.
Yep. Excellent. Well, that takes us right on to time. It's a really good rendition of the state of the industry, lens on investment within South African PGM miners. So thank you very much for joining me, Hanre, Henk, and Michael, and thanks for your time.
Most welcome. Thank you. Thanks, guys. Good to see you guys. See you in person soon.